Oh, by the way, that's the other thing. Before I go into that, the law does not require you to have auto insurance. People don't know that. And if you look on the registration, it actually has that language. It does not.
Auto insurance is not required.
Auto insurance is not required. So the discussion we want to have this time is more about this whole notion of financial planning. And in my particular industry, it's interesting how some are labeled financial planners and they have no background, no information, no understanding of the things they don't know. For example, they may know things in the area of mutual funds or stocks, bonds, investing, but then they don't know anything about the life insurance components, health, disability. Or they may know life, health, disability, and a little bit about mutual funds, but they know nothing about auto insurance, homeowner insurance, property and casualty. And so they'll write a complete financial plan, and then you go pay these organizations $4,500 for this plan, and the person has not consulted you on anything on your auto insurance or umbrella insurance or the other parts that, constituent parts that go together. So I like to sort of stay away from the financial planning and just talk about more like life planning and life coaching, and that's what I was describing earlier. So then it's more general, and it doesn't necessarily lead to something that sounds so salesy, right? Okay. So my experience has been, since I have a deep background in the property and casualty side, the life, health, and disability side, and the security side, I can speak all three languages fluently and amalgamate them, right? Yeah. And so one of the things that I had observed over the years is, say for example, an individual might have health insurance on their auto policy, right? Because on their auto policy you have bodily injury, which the law requires. Yeah. Oh, by the way, that's the other thing. Before I go into that, the law does not require you to have auto insurance. People don't know that. And if you look on the registration, it actually has that language. It does not.
Auto insurance is not required.
Auto insurance is not required. Proof of financial responsibility is required. Big difference. So proof of financial responsibility, the easiest way to satisfy that demand is typically through auto insurance, particularly if you're younger, like you, right? Because you don't have many assets that you'd be willing to forego in the event of, right? Contrast that against someone who's a little bit older, who has a house and has the 401k and has stocks, bonds, and everything else. They're going to go buy auto insurance just because they don't want to lose those things, right? But truth be told, you don't have to have the auto insurance. You can just show proof of financial responsibility and put it up. You can sign it over. You'd be a fool, but you can do that, right? And so I hear so many people say, "Oh, your registration requires that you have that." Read the thing closely. It does not say that, right? And so the requirement is to satisfy. See, the government really doesn't care about you. They care about the damage that you could cause to others that they would have to be liable for, or they'd have to pay for ultimately, right? That's so they want a backstop. So bodily injury is the first coverage under auto insurance, and it covers in the event of a third-party person getting injured by you, which means if you have a passenger in your seat right next to you, or if you hit the person right outside of the car, if you run over them and their dog, and that kind of a thing. And that liability, the bodily injuries, that takes care of their hospital bills, their medical, and so forth. You get that? By the way, not the dog. And so I don't want people to get that confused. But it takes care of that component. Incidentally, typically people, as they say, birds of a feather flock together. Typically people hang around people that are a lot like themselves. And so if you're the kind of person who has a job and has health insurance at your job, typically the kind of person you're riding with is a person who has a job and has health insurance at their job, right? And so they have kind of like a dual coverage there, but your coverage would be the liable coverage, okay? The next thing that they have on that is property damage, right? So property damage would be, let's say for example, you're in a multi-car collision, and an officer pulls up and writes the report. You're responsible for the car in front of you and behind you for some odd reason, however that works, right?
Bad day.
Yeah, bad day. And so if that's the case though, you want to make sure to have copious coverage in that particular area. That is really all you need to satisfy the law, those two. Okay. And so now, let's say that you don't buy your car outright, the way I prefer to buy cars, but let's say you finance the car. And so now the finance company is interested in you carrying some protection for their benefit. Get it? We're still not interested in you. We're interested in them, and the finance company is interested in themselves. If you don't put coverage on the car, they will put coverage on only to their protection,
Right.
right? They won't cover your third party stuff. They will cover the stuff that covers them.
Right.
So after the bodily injury and property damage, you have these middle coverages, and beyond the middle coverages, which I'll circle back to here in a minute, you have this thing called comp and collision. Comprehensive coverage and then collision coverage.
Okay.
Right? On comprehensive, I'll give you a great example about what happened to your mom several years ago. No, I used to always tell her, anything ever happens, you make sure you don't tell anybody but me. I got the information, right? So, because they'll get you all mixed up on things, right? And so, basically the way it works is anything that isn't a collision is comprehensive. And so, you can carry an exceedingly low comprehensive deductible, which is not very expensive. Collision is the expensive part of your policy, and if you're a responsible driver, like you and I, you can carry that thing at $1,000 or $2,500. Big number, right? Which means you get the number as low as possible. You almost, in a sense, self-insure up to some extent, right? And you figure, well, if I cause the collision, I ought to be coming out of pocket, and I've got $2,500 in my CD anyways, so I'm good to go, right? Or $1,000 in my CD or something like that. But you typically will see in the marketplace people with just the opposite. They'll have comprehensive with a very high deductible, which means they can't get the windshield taken care of, and the simple things, right? And then they'll have collision at the low number, right? And then there's some other parenthetical things, like if you have the same carrier, I have, say, carrier X, and you have carrier X, then our deductible is waived. Or an individual has they're involved in the collision, but it isn't their fault, and they end up paying the collision to the insurance company because of the misinformation, and they just don't know. All the things people don't know is what cost it.
Okay.
Right? And so in this particular incident that I'm describing years ago when your mom hit the Honda, the incident was she's driving down the freeway and a truck in front of her, a board eject, like a plank, a 2x4, something like that. And on the way to the ground, it hit the car. Right?
Yes.
And so if it hit the ground and she hit the board, it is a collision.
Okay.
It hit her before it hit the ground, so it is comprehensive. And right away, the insurance company is trying to have a battle with me, and I'm like, don't even try it. You're working with the wrong guy.
Right.
Don't even try it.
Right.
Short discussion. So that claim solved real easily. But again, that matters, right? A second later, it's her fault. Big deductible, right? So the board hit her, it goes down to the ground after. That's a comprehensive claim, all taken care of. Easy enough.
Yeah.
So again, it's things that you don't know. They get you caught up financially. Again, financial planners can't discuss this area typically because they never learn anything about property and casualty insurance. Zero.
Wow.
So how do they call themselves financial planners? Think about that.
Interesting. Okay, so I was under the assumption that financial planner, right? You're given a title. That means you can do all of the things that the title encompasses.
Right.
But evidently that's not the case.
Right. And you can't be all things to all people, and you can't know everything. Not the point.
Correct.
But our industry's done a very poor job in making sure that if it's going to give people these comprehensive titles, that they should have more comprehensive education. Right? Something more like, why can't we have the people that are called financial planners study something along the lines of the auto insurance area or the home insurance area, the property and casualty area, not in depth, but enough to know what they don't know, meaning before I sign off on this comprehensive plan and say that everything's okay, you'd say, I'm going to call in my property and casualty specialist so that they can double check things from that side of it, umbrella coverage, so for example, right? And when they okay me, I'll sign off, right? So it's kind of like saying a doctor knows everything about every part, right?
We know that's not true.
Well, we know, Well, one doctor told me, remember, he said, remember, we're practicing medicine. It's like, oh. I have my fingers to show, right? So he didn't feel like fixing that case over at Kaiser. So I was like, all right, you keep practicing, and I guess I'll keep this bent finger, right? So they just didn't want to repair the damage. I could have pressed that issue, but it was not worth it at the time, right? Golfing incident. So, but back on those coverages. So you have bodily injury, property damage. Then you have this one, which is probably well needed now, uninsured motorists and underinsured motorists.
Familiar.
Right? And so that's for the individuals who happen to cause the incident, who have insufficient insurance to cover the damage. So to make sure that you are protected. Right? So both for your bodily injury issues and both for cover your property.
Okay.
Right? And so you have the bodily injury, property damage, uninsured motorist, and then you go into the comprehensive, then you have collision, then you have these things like tow and so forth, right? And that's also, tow coverage and rental reimbursement, they call it.
Yes.
And those are two separate things.
Yeah.
And so, too, that's another area where I see people, they have tow with AAA, and then they have tow with someone else, and they have tow with their American Express. They have tow coverages everywhere and don't even know how they work. Maybe the one with company X only tows you 5 miles, right? And that's very common. And maybe one with your credit card tows you all the way home. Or maybe you can put the two together if you know how to sync them up. But since most people are in a panic with those situations, they use one or the other or nothing and end up paying out of pocket.
So yeah, adulting. Super fun. Super fun. Except I don't really know what it means. I thought I did. Turns out I don't. I feel like I'm learning so much. And yet I'm already an adult.